Let's take a look at some key economic indicators and what they tell us about the current state of the economy. This chart tracks four major data points. The green line shows the US GDP, which is currently at $29.72 trillion. The economy continues to grow with the GDP increasing. This suggests resilience despite concerns over inflation and interest rates. A rising GDP is a positive sign, indicating that businesses and consumers are still spending and economic activity remains strong. The blue line represents the inflation rate, which is currently at 2.82%. Inflation has come down significantly from its highs in 22 and 23, thanks in part to the Federal Reserve's aggressive rate hikes. We are now in a much more stable environment, closer to the Fed's target of 2%, which is good news for both consumers and investors. Federal funds rate, shown as the orange line, is currently at 4.33%. Interest rates have remained elevated as the Fed continues to battle against inflation. While we've seen some minor reductions, rates remain relatively high, which impacts borrowing costs for mortgages, credit cards, and business loans. The key question moving forward is, will the Fed begin cutting rates later this year if inflation continues to trend lower? The purple line shows the unemployment rate, which currently sits at 4.1%. The job market has remained relatively stable, with unemployment hovering just around 4%. While it has ticked up slightly, this level is still historically low and suggests that the labor market remains strong. So here are the key takeaways. The economy is still growing and inflation has cooled considerably, but higher interest rates are keeping borrowing costs elevated. A stable labor market suggests we are not headed for an immediate recession, though rate cuts in the future could provide additional relief. We are continuing to monitor these trends as they will heavily influence the Federal Reserve's decisions and market movements in the coming months. Overall, while there are challenges, the data suggests a steady and resilient economic environment with potential for future rate cuts if inflation remains controlled.